Welcome back to EG Financials. Today we're taking a look at a economic and real estate forecast by Freddie Mac. Last week we looked at the forecast and price predictions for the real estate market that CoreLogic came out with. We'll see how the real estate predictions from CoreLogic differ from the ones from Freddie Mac. Make sure to check out that video from last week for the CoreLogic forecast. It had some neat highlights and charts to look at. So let's go ahead and get started. Let's take a look and see what Freddie Mac is expecting for next year regarding home prices and the economy. And also make sure to comment below what you think will happen with the real estate market. Are prices going up, down, staying flat? What do you think? Okay, here we go. So we're looking at Freddie Mac's most recent market outlook report. And if we scroll down, in this chart here, Freddie Mac is showing us that new home sales are increasing as a percentage of total sales, meaning that existing home sales are not increasing at the same rate as new home sales. And again, that's an issue with the inventory problems that we're facing with existing home sales. People have the lock-in effect where they're not putting their homes on the market. So buyers have to look at new homes because the inventory for existing home sales isn't there. And if we continue scrolling down, I highlighted some key notes, and here we can see that there's 2.9 months supply of existing home sales at the current sales rate, and existing homes remained on the market for only 22 days in April. New homes, on the other hand, have 7.6 months of supply. So 2.9 months versus 7.6 months. And here we have another chart showing new home inventory as a percent of total inventory. So we're looking at what percentage of total inventory are new homes. And we can see that it's been increasing since 2011, and it's at the highest levels it's been for the past few decades. So again, another way to look at it, total inventory, total real estate inventory, about 30% of that are new homes. Here we have a key highlight from the article. The divergence between the new and existing home sales markets is suggestive of a substantial rate lock-in effect. Homeowners with lower rates on their mortgages have a lower propensity to list their homes for sale and move due to the elevated rates of today, which pushes prospective buyers into the new home market. Let's continue scrolling down. Here we see some quick notes regarding the 30-year fixed rate. They're showing that for a while mortgage rates were between 6.28% and 6.43%, but as of June 1st, rates reached 6.79%, the highest reading since November of last year. And this chart is showing the volume for mortgage originations. The yellow bars represent refinances and the blue bars represent purchases. We can see that refinances are way down compared to 2020 and 2021. And again, that's due to mortgage rates increasing. However, purchases haven't seen that decrease. There's a slight decrease since the last year or so. This shows that demand is still out there and people are still trying to buy even at these higher rates. Keep scrolling down. Here we start to see Freddie Mac's outlook for next year. Macroeconomic indicators like GDI and inflation point to a slowing economy that could tip into recession if hit with a significant adverse shock. However, our baseline view does not include a recession, rather only a slowdown in growth and a modest uptick in unemployment as the most likely scenario. Let's continue on. Here we get to the home price predictions for the next 12 months and a little further out as well. Employment is likely to weaken, so we maintain a cautious outlook for our prices. Our official corporate forecast calls for house prices to fall 2.9% over 12 months through Q1 of next year, and an additional 1.3% over the subsequent 12 months. There's a big difference between the real estate forecast from CoreLogic, which we covered last week. Make sure to check out the video, versus Freddie Mac's forecast, which we're looking at now. CoreLogic expected home prices to appreciate about 5%. And Freddie Mac is saying they're actually expecting a decrease. It's not a huge decrease, but it's still off compared to what CoreLogic is expecting. And that's it for today. I'm always trying to keep these videos quick and short, but feel free to visit this website to read the article if you want to go through all the details. I'm always covering these predictions and market outlooks from the major institutions, which again, they all provide different perspectives and different insights. And again, that's it for today. Make sure to follow for more updates. Thank you.